Hello and welcome back to our channel where we simply define economic concept complex and make it simple for you. Today we are taking a closer look at capital accounts. Sounds complicated? Well, not for long. Let's dive in. To understand capital account, we first need to talk about something called balance of payment. Well, it is essentially a record of all economic transactions between a country and the rest of the world. The balance of payment is divided into two main parts: current account and capital account. Now, current account includes things like trade in goods and services. In capital account, that's what we are going to focus on. So there is a balance of payment. Balance of payment is the record of all economic transaction between a country and the rest of the world. Balance of payment consists of two parts: capital account and current account. Current account, as we have just discussed now, it includes things like trade in goods and services. So what does capital account cover? Well, it records the funds of flow for investment and other capital related transactions into and out of the country. This can include direct investment, portfolio investment, and changes in reserve assets. For example, if a foreign company invests in a factory in your country, or if your government buys foreign bonds, these transactions are recorded into the capital account. So anything that has to do with investment will form the part of capital account. Anything that has to be doing with capital formation, it will go in the capital account. So why should you care about capital account? Well, it indicates that the health of the economy and attractiveness to foreign investors. And that's it. You've now got a basic understanding of the capital account. As always, if you found this video helpful, hit the like button and subscribe for more easy to understand economic content. Keep learning and see you in the next one.